SMEs, innovators, trailblazers, and digital visionaries. Welcome to the 5th edition of the IBSi Digital Banking Awards 2025, a global celebration of excellence and leadership in the ever-evolving world of digital finance. I am Nikhil Gokhale, leader of research platforms at IBS Intelligence, and your MC for the day. It's my privilege to take you through this year's virtual showcase, one that brings together the brightest minds and the boldest breakthroughs in banking technology. These are pushing boundaries and redefining the art of possible in the digital banking landscape. Today, we live in a world where digital transformation is no longer just an ambition. It's the foundation of everything we do. The landscape of banking has undergone a profound shift. We have witnessed the rise of over 300 digital banks globally, and that number continues to grow every quarter. These banks are not just rebranding old services, they are fundamentally rethinking how people save money, invest money, borrow money, and pay money. The digital banking has become a truly global phenomenon. It's no longer limited to a few fintech hubs, but reaching consumers from Jakarta to Johannesburg, Sao Paulo to Stockholm, and Mumbai to Milan. What once felt as emerging tech is now embedded in daily life. With mobile-first experiences, AI-driven personalization, and embedded finance, all of this has redefined how millions manage and move their money. In fact, in UK alone, 40% of adults now hold a digital-only bank account. And that's up from just 24% 1 year ago. This reflects how digital banks are going from a shiny new object to the preferred mainstream. And this shift is more than just technological, it's deeply human. For more and more people, banking today is starting digitally, and it's not just for the younger customers. For example, millions of customers across Africa who had no access to physical branches are now using mobile apps, and this is making financial inclusion a reality. And that's exactly why we are here today, to recognize and celebrate the people, the platforms, and the projects that are pushing boundaries, and in doing so creating a more secure, accessible, and intelligent financial ecosystem. This year marks the 5th year of IBSi Digital Banking Awards. What began as a niche award for a few dozen eligible banks has grown into a truly global benchmark. We have evaluated over 200 submissions across the 5 years in more than 60 countries. We've connected with hundreds of banks and fintech firms who are committed to transforming banking inside out. This year, in fact, has been our biggest so far. We've expanded from 3 to 5 categories. We received over 100 nominations and saw participation from more than 50 banks and 30 solution providers. It's our most diverse and competitive edition yet, a clear reflection of how deeply digital transformation has embedded itself in banking. Behind today's announcements is a rigorous process. Each submission is vetted by 2 independent panels. Their scores are cross-referenced, and the submissions where the delta is high are evaluated by a 3rd panel. Finally, the assessment is presented to our jury members, who always ask really tough questions and make my life super difficult. So believe me when I say this, if you spend an hour filling the submission, my team has spent 4 in reviewing them. And I would say time well spent, as you will see later today. The categories this year, they reflect the full spectrum of digital banking innovation. From segment leaders in retail, SME and corporate banking, to standouts in customer experience, digital lending, RegTech, and many more. We then have the regional champions across Asia, Middle East, Africa, Americas, and Europe. And the tech achievements in AI, open banking, and intelligent automation. What's most exciting is how these innovations are not just built for today. They are designed for today. They anticipate changing user behavior, adapt to regulatory shifts, and they have what it truly takes to be a winner in this digital world. Okay, enough of me talking. It's time now to hear from the experts, the ones who've been there and done that, and frankly speaking, are itching for a lot more. It's my privilege to host 3 very influential people in the digital banking landscape. I'm going to talk to David Jimenez Maireles, co-founder of TNEX. TNEX is Vietnam's first digital-only bank. And he did not just launch a bank, he helped spark a new era, literally a new era of financial inclusion for millions. A globally respected digital advisor, David brings a rare combination of deep strategy and fearless execution. Next, I have Sahil Thapa. As the former CTO of Recognise Bank, he led the charge to support SMEs, a segment that is often overlooked, yet which is vital for economic growth. Sahil's passion for building lean, high-impact banking systems has made him a go-to person in fintech architecture. And finally, we have Mahesh Paulini Subramanian. Mahesh is the CTO at BKN 301, a company that is quietly powering digital banks through banking as a service. He is known for combining a visionary approach while engineering leadership to build solid digital platforms. Let's kick things off with you, David. You helped build one of Southeast Asia's most ambitious digital-only bank from scratch. What were the most underestimated and the most underrated challenges in launching TNEX in Vietnam? And what would you say are the 3 non-negotiables in setting up a digital-only bank?
Hi, Miguel. Yeah, thanks for having me. Well, that's a tough question. I'll start with the banking trust. When we started TNEX in 2020, 70% of the population, they didn't have a bank account, either because banking was a privilege only for the affluent. It was expensive. Most of the customers, they need to pay fees unless you have a very high minimum balance, or simply they were not in the vicinity. So, you have to walk kilometers for the closest branch. So at that point of time, bridging the digital banking trust, it was a really hard challenge we went at the very beginning. The second, I will say, the infrastructure friction. We were the first bank to launch a new core banking system on the cloud, to start using eKYC as the first digital bank in the region. Unfortunately, there are no central databases in Vietnam. ID documents are not standardized. OCR solution at that point, they didn't work really well with Vietnamese characters. So we had to go through a lot of challenge internally, technically, to overcome all these problems. And the last one I will say is financial education and financial literacy. I think we have seen this problem across different markets in Southeast Asia. The financial literacy of consumers are really low. So one of the things we wanted to do was make banking simple, easy, and accessible for everyone, trying to remove all the complexity when doing banking, and trying to be very upfront about the fees that we're gonna charge and the service we provide to our customers in a simple way. Regarding the second question, the 3 non-negotiable, I think I'll start with long-term vision. I think we tend to forget that building a digital bank, it's a long journey. You have to go through 3 to 5 years. That's the average time in Southeast Asia to become profitable. We're looking for high volume, low margin, and therefore you have to make sure that you have enough customer base you can monetize through cross-selling, upselling, and selling more products. The second will be, for me, the most important is the completely obsession about customers and have a complete different banking experience. I think these two things most of the times we've seen over and over too many Me Too strategies. Digital banks kind of making digital process for the same solutions instead of reimagining what are the concerns, what are the needs for these customers, what are the customers demanding nowadays, and trying to be different. In our way, we partner with a gaming company to launch TNEX, and we wanted to be different by making the whole experience take gamification to a completely new level, but just launching an app with a gaming company. And the last one, I will say, I was saying this many times, lending and SMEs, you won't be profitable unless you launch, a lending product, or you tackle one of the most underserved segments in the region, that is, micro SMEs, that they don't belong to the SME proposition, they don't belong to retail, and there are like millions of micro SMEs in every corner of Southeast Asia selling fruit, fixing your shoes, fixing your watches, selling tea, and they still, most of them still need to be unbanked, or they need to be served into having access to formal lending solutions.
So if I were to try, it was scale, it was SMEs, and I think you use a very interesting word. We've heard customer centricity often, but you use the word customer obsession. This is taking it to a next level. How is it different?
I think we tend to forget who are we here for and how often we meet our customers. One of the things we did well, it was to have a very regular cadence to meet our real users. They share with us brutal feedback about the things that they like about the app, the things that they don't work as we plan to be, and the needs and the solutions that they were looking for. We tend to forget and we put in banking products to our customers, but that's the end state. Customers, they want a new motorbike, they want to save for the future, they want to take their daughter to university, and they want to have a savings product. So we need to start thinking how our customers are approaching. And for me, this is what I call customer obsession. Is everything you do has to be not with putting customer first, but meeting them face to face. Make sure that even the CEO executives are understanding what are the customers you're serving, and making sure that we reduce the gap between being in a very fancy office and being our customers selling things, or going through a very tough things. One of the things we realize, our customers, they had no money at the end of the month, and they were eating instant noodles. So we came up with a PFN that it was based on emojis. So, we put an emoji crying if you surpass the daily limit for the day, just to make sure that our customers know that if you keep spending this way, you're going to end up with instant noodles. So, trying to be very empathetic, but very real, and making sure that your product is good, your product is serving them, and making sure that you hear what they're saying and what they need.
Turning to you, Sai, you led technology at a UK challenger bank, which is focused squarely on SMEs. Uh, you could tell us how are digital banks uniquely supporting SMEs that probably traditional banks aren't doing so far.
Yeah, Nikhil. I mean, let's start with why SMEs really matter, right? They are the engine of the global economy, right? Globally, SMEs account for 90% of the businesses and contribute upwards of 60% of private sector employment, right? In the UK alone, SMEs are contributing upwards of 2 trillion to the economy, right? So they're not just kind of important, but they are essential, right? But what has happened over years of evolution of the traditional banking model is they've heavily been underbanked and underserved, right? However, now their needs are fast evolving. And digital banks specifically are winning in this space because they are addressing some of those needs that SMEs have had through a smart use of technology, their broader and clearer understanding of regulatory guidelines, and also more specifically a design philosophy that puts customer at the center, right? And this is where I think traditional banks, because of the way they were set up, they've lacked. They have scale, they have trust, but until and unless they really kind of create an enterprise architecture and a mindset that allows them to move at the speed that SMEs are moving, I think digital banks will continue to, take more land grab in the SME customer segment. Just to kind of hone in a little bit more, I think in my head, it's a coming together of 3 big drivers that has supported digital banks to really play a much more vital and important play in the economy by supporting SMEs, right? Those 3 factors are around customer expectations on how they've evolved over the last 10 years, so to say, the regulatory evolution and how that has boosted competition and has created many more players in the banking sector and in the fintech sector. And the third and the most critical one is all the advancement that has happened in technology, not just in banking, but more so around the use of big data, cloud compute, and now AI is kind of taking over all our lives in a way that we thought was not happening now, but probably 10 years down the line, but it's happened so quickly, right? So these factors have come together to create the perfect conditions for digital banks to really sort of catapult where they have been in the society and grab as much, not just in the SME segment, but also span across what they offer, both as a product and experience to retail and to corporates as well. And SMEs will benefit the most in this, right? Now, purely from a SME needs perspective, right? SMEs today operate in real time. They are very comfortable running their entire business from a mobile device, right? They need capital fast, they want integrated tools, and they want basically banking to be becoming a partner to them rather than a service provider, right? Who's just kind of there in the shadows. And that's where digital banks are kind of stepping it up by creating an ecosystem where it's not just about parking your money, but being able to take smart decisions about that money in one place. That's what's kind of supporting digital banks create an offering that has a natural taking with the SMEs, right? Now,
Right.
how have digital banks been able to do this? I think technology and creating enterprise-wide processes that are able to embed this technology into existing workflows, that has been the distinguishing, let's say, internal model that all digital banks have tried to adopt. Some have done it better, some have probably not, but that is the trend, right? Cloud native infrastructure, APIs, AI, they're all enabling real-time decisions, very hyper-personalized experiences, predictive insights to the end customer. And that is truly the need of today, right?
Mahesh, bringing you in, you build the rails that others bank on, right? So, what's the one thing that most founders or even seasoned executives, for that matter, what is that one thing that they misunderstand about banking as a service, or BaaS, as they call it?
Good question. Let me kind of take a step back on this one and just kind of really do a quick 10-second or less take on what banking as a service actually translates to. For us, and trust me, this phrase is completely overloaded, but for us, when we talk about banking as a service, we talk about providing the capabilities necessary to build out either specific point features or complete products and services for any organization that requires some level of banking capability. That can range from current accounts, cards, payment services, credit offerings, whatever, any of those particular features. It can also consist of getting access to licenses, as in you need the ability to provide banking services in a specific country. All of those, which by the way, we do because we are awesome, but that's a separate story. But the thing that I always run into, to answer your question, is what I would describe as the difference between IT and product. Let me explain. In the world out there, when you talk about organizations, typically larger organizations, they tend to have one of two views on banking systems and banking services. Most of them, even today, tend to treat banking systems, core banking systems, credit services, things like that, as IT. And I use the phrase IT in the pejorative sense, as in it is a cost center. That is a thing that I spend money on. I typically have a CIO who is responsible for managing that cost center. By definition, IT is a bad thing because I'm spending money on it, and I don't like spending money on things. Banking as a service, in the beginning, when we talk to folks, typically they look at us and say, oh, so you're a way for me to reduce my costs. You're another IT service.
Cost center.
Which, yeah, that kind of works. It does help there because, scalability, cloud services, blah, 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 the usual story. But what we always try and do is get them to understand that we're talking about products and product enablement, as in this is a thing that will allow you to add features, add new revenue streams, add new top-line capabilities. This is a thing that you should be looking at from a business growth and a sales perspective, not a how do I reduce my costs perspective. Once our clients connect, once it clicks for them, it kind of fundamentally changes their perspective on things. All of a sudden, they're sitting there going, oh, hey, wait, if I do that, I can connect these two particular things, which in the past were just impossible to connect because two completely separate legacy systems that had nothing to do with each other. Now I can bring them into one single room. I can build new products. I can now integrate my loan syndication with my loan management and my margin loan services. whatever. I just made that up, but you kind of get the point. So to kind of bring this back, it's the difference between looking at things from a top-line perspective versus looking at things from a cost center IT perspective. They both work, but to get ahead in the world these days, you can't just keep looking at things saying, how do I reduce my costs on this? You need to say to yourself, how am I going to grow my company? How am I going to add new revenue streams? How am I going to hit new markets? How am I going to grow my TAM? Which is at the end of the day, the name of the game here.
All right. One rapid fire question to all of you. If you had 100 million to place one bold bet on the future of digital banking, what or where would it be?
Quick one. I think it will be my winner will be Indonesia. I think the largest country in Southeast Asia, where most of the unbanked population still remain unbanked or mainly banked, just having a bank account. And then I will say two options, either a digital bank focused on SMEs or an embedded finance proposition, to turbocharge, because we have seen here how the lines between the different industries are quickly disappearing. So you can, order a taxi and get a micro insurance. You can go to e-commerce platform and get buy now pay later proposition. So we have seen how many players are coming into financial services. So it's either banking they do the other way around, or other one will come here to attack and make a very centric strategy to bring financial services with their own ecosystem, with retail, with telco, with insurance.
Nikhil, that's not an easy one, but I'll take a stab at it, and especially try to bring in some of the things we've observed in last 3 to 4 years. I think the bank of the future, or the digital bank of the future, would not just be a bank that's just managing money. It would be a bank that's managing complexity for its customers, right? And that's where the next big moat will be built in the digital banking space, right? So if I had 100 million to myself, and I'll wait for you to transfer that to me, I'd invest that into building a truly first of its kind agentic intelligent SME bank, right? A platform that's just not offering financial services, but it's actively running parts of the business of the SMEs, right? Where it truly becomes like a smart assistant co-pilot supporting SMEs and entrepreneurs, right? Now, why SMEs? We've spoken a lot about how they are underbanked and underserved, and they've had a lot of friction in how they've engaged with these service providers. That's where I think the value creation is maximized by offering them this sort of an agentic platform. And the tailwinds of AI, open banking, embedded finance, they will all sort of help us create this bank of the future, right?
That's surprisingly enough a really easy question to answer from my perspective. It is the commoditization of credit products for the unbanked or the underbanked. Let me explain this a little bit. A huge portion of the world today is unbanked or underbanked. And by and large, this tends to be in either developing countries, but it's also in countries like India, Vietnam, Thailand, everywhere. There's a ton of people that are still cash economy people or UPI economy, but it is not a banked economy, so to speak. Most of these folks actually have small but relevant money flow happening back and forth. But typically, almost all of these subsist on a week-to-week basis, if not a day-to-day basis. The availability of limited credit products, an extra $1 a week, an extra $2 a week. And I'm not talking about microloans. It's just about having that little tiny extra amount in a time of need to cover a specific exigency. Yeah, we always talk about medical emergencies and stuff like that, but no, it could even be something as simple as, hey, I'm in Mexico. It's come to the end of the week. I went out for dinner and I want to get an extra set of tacos. Something as stupid as that. That's an extra 30 pesos that I want to spend. The ability to be able to say, hey, for the banking provider to be able to go, yeah, you know what, 30 pesos, this person is good for it. I'll front them the 30 pesos right now, and that gets paid next week as soon as they get that extra 30 pesos. Limited, tiny credit products, which at scale is an insane amount of money. I mean, remember, we're talking about a huge population of the world. This is there right now, and I say this in a very self-interested way. One of my companies, Clar, based out of Mexico, is doing exactly this extremely successfully. But I expect to see this pretty much everywhere popping up. So commoditization of credit products for the underbanked or the unbanked. Mark my words, it's going to be there.
Awesome. Now all of you know who to reach out to if you need money. Thank you, gentlemen, for taking the time out and being generous with your advice for all the budding entrepreneurs out here. Whether you're a fintech founder, a digital transformation leader at a bank, or a developer writing the next gen code, this event is about you. Your boldness, your vision, and your commitment to do things better, to making banking more inclusive, more responsive, and simply more easy. So without further ado, let's begin. First up, we have the very foundation of banking, the customer. This award group honors excellence across key customer segments: retail, SME, corporate, Islamic, and private. Each winner has demonstrated how digital can meet very distinct needs with precision, scale, and vision. And the winners are our next award group, shine a spotlight on real world results. These awards recognize excellence in areas where strategy meets execution, specifically innovation, customer experience, implementation, and program impact. The winners haven't just launched good ideas, they have delivered measurable value at scale. These initiatives are changing the way banking is built, delivered, and experienced. And the winners are next, we have digital transformation across the globe, but every market tells its own story. Our regional award group honors institutions leading the charge within specific groups, adapting to the regulatory, cultural, and consumer dynamics while still delivering globally competitive solutions. From Asia to the Middle East, from Africa to the Americas, and to Europe. The winners here are proof that innovation knows no borders. And the winners are The next section recognizes specialized capabilities, the operational engines behind great digital banking, whether it's digital onboarding, credit innovation, hyper-personalization, or compliance. These awards shine a spotlight on precision, performance, and platform intelligence. These winners are proof that success is often found not just in what you offer, but how seamlessly, securely, and smartly you deliver them. And the winners are And finally, we turn our attention to the technologies that are reshaping the industry's future. This award group recognizes bold adoption of emerging capabilities, namely AI and machine learning, API-driven ecosystems, intelligent document processing, and true straight-through processing. These innovations are laying the groundwork for the next decade of banking, more open, more adaptive, and more intelligent than ever before. And the winners are And with that, we bring this mini celebration to a close. What we have witnessed today is more than innovation. It's transformation in motion. Each of our winners represent what's possible when vision, technology, and purpose align. As we look ahead, one thing is clear: the future of banking isn't just digital. It's dynamic, inclusive, and human-centered. We can't wait to say what next will be. Let me now call upon Amit Jain, partner and head of IBS Intelligence, to do the closing honors. Amit?
So as we come to the close of our Digital Banking Awards ceremony, I want to thank all of you for joining us today. A special thanks to our winners, participants, and everyone watching us live. My sincere appreciation to our three speakers, David, co-founder TNEX in Vietnam, Sahil Thapa, formerly with Recognise Bank in the UK, and Mahesh from BKN 301 for their thoughtful insights. As we all know, digital banking continues to evolve rapidly, and it's the work like that of our speakers and yours that is shaping its future. Through the year, IBS will be hosting the iconic Sales League Table in London this June, and the highly recognized Global Fintech Innovation Awards in November later in the year. We look forward to your continued support at our upcoming Cedar Awards and Summits. On behalf of IBS Intelligence, our jury, and the entire team behind the Digital Banking Awards, thank you for joining us today. To the winners, congratulations on your achievements. To every participant, thank you for pushing the boundaries of what digital banking can be. And as I sign off, until next time, stay inspired, stay bold, and keep building the future of finance.